Good morning, children. Let us see now the next chapter, financial planning. Now, in this chapter, you have to study about the what do you mean by financial planning, then the savings and the investments, then tax structure, and the computation of the income tax on the income for the given year. Now, let us see. Anagha, shall we buy computer? Mother says, okay, let's buy it next year. Anga asks, Mama, why not now? Mother says, Anga, you don't know how expensive it is. Anga says, you mean we will have to save up for it, right? Mother says, yes, that's the thing. We often hear such conversations. Everyone requires money to meet a variety of needs. That is why, after spending on the necessities of the present, everyone tries to save money to make provisions for the future needs. That is what we call saving money. So, in order to protect our savings or even to make them grow, we keep them as fixed deposits or buy immovable properties such as house, land, etc. So that is what we call investment. Now each investor first spends the amount required to meet the primary necessities and save the remaining amount. One also uses these savings to make a carefully considered investments. So this is called financial planning. Now main purpose of the financial planning is protection and growth of the wealth. Now, financial planning is useful for making provisions for the predictable and the unpredictable expenses that each of us has to meet in our life. Now, the examples of the predictable expenses are education of the children and other expenses for them, then capital for a profession or the business, buying a vehicle, buying or building a house, then old age requirements. And for unpredictable expenses, examples are natural disasters, medical expenses for a family member, loss due to an accident or the sudden death. So above consideration make it quite clear why financial planning is must. However, some important points must be kept in mind as we plan our finances. Now, first is here about the savings. It is for our own benefit to keep our savings safe and to make them grow. Now, our savings remain safe in a bank or in a post office. Money saved in a bank is also useful for cash minus transactions. This way, we don't have to carry large amount of cash or worry about losing it or getting it stolen. If the money we get or earn is in the form of the cash and if we keep it as it is without investing it, the value diminishes with time. For example, if today you can buy two pencils for 10 rupees, a few years hence you will be able to buy only one for that amount. So if the amount invested is used for expanding a business, to start an industry or other such purposes, it contributes to the growth of the national production. If some part of the income is spent for socially useful cause, everyone benefits from it in a long run. So after spending on necessities, it is beneficial to limit spending on luxuries and to save instead for education, medical treatment, etc. So thus we see here that the savings and the investment here, it can be in the form of RD, PPF, postal life insurance, senior citizens investment scheme, then pygmy account, savings account, then NSS. So these are shares, insurance, bonds, then this one recurring deposits, savings account, national limit, etc. So this is how these are all the different things in which we can invest or save the money. So we see that these investments are of many types. Investors often favor institutions like banks and postal departments for investing their money because it is safe there. It is a certain risk in investing money in shares, mutual funds, etc. That is because this money is invested in a business or industry, and if that incurs a loss, the investor suffers the loss too. On the other hand, if it makes a profit, the money is safe and there is the opportunity to get a dividend too. Now, investor must take into account two important points when making an investment: the risk and the gain. It is possible to make a big gains by taking greater risk. However, it must be kept in mind that greater risk can also lead to greater loss. Now, let us see here practice set 6.1. Now, let us see practice set 6.1. Alka spends 90% of money that she receives every month and saves rupees 120. How much money she gets? Let Alka get X rupees per month. Now, amount spent is 90% of X. So, 90% of X is equal to 9 upon 10X. Now, savings is 120. Amount she got is x minus 9 x upon 10 is equal to 120. So 10x minus 9x upon 10 is equal to 120. So x will be 120 into 10, that is 1200. Now second one, Sumit borrowed a capital of rupees 50,000 to start a business. In first year he suffered a loss of 20%. He invested remaining capital in new business and made a profit of 5%. How much was his profit or loss on original capital? Now the capital is rupees 50,000. Loss is equal to 20% of 50,000, so that is 10,000 rupees. Now new capital will be 50,000 minus 10,000, that is 40,000. So profit will be 5% of 40,000. So 5 upon 100 into 40,000, that is rupees 2,000. So the new capital with the profit will be 40,000 plus 2,000, that is 42,000. Original capital was 50,000. Loss will be equal to 50,000 minus 40,000, that is rupees 8,000. Now the third sum is Nikhil spends 5% of his monthly income on his children's education, invested 14% in shares, deposited 3% in bank, used 40% for daily expenses. He was left with a balance of 19,000. What was his income that month? Let Nikhil's income be X for the month. So total expenses is now 5 plus 14 plus 3 plus 40%, that is 62%. Total monthly income expense is 62% of X, that is 62x upon 100. So balance is now income minus total expenses. So 19,000 is equal to x minus 62x upon 100. So 19,000 will be equal to 100x minus 62x upon 100. So 38x will be equal to 100 into 19,000. So x will be 19,000 into 100 upon 38, that is rupees 50,000. So his monthly income was rupees 50,000. Now fourth one, Mr. Syed kept rupees 40,000 in a bank at 8% compound interest for 2 years. Mr. Fernandez invested rupees 1,20,000 in a mutual fund for 2 years. After 2 years, Mr. Fernandez got 1,92,000. Whose investment turned out to be more profitable? Now compound interest for Mr. Syed is as follows. Compound interest is given by amount minus principal. Amount is given by P into 1 plus R upon 100 raised to power n. So substitute the values here for 40,000 into 1 plus 8 upon 100 raised to power 2. So after solving this, you get the compound interest amount as 46,645. So interest is given by amount minus principal. So 46,656 minus 40,000, that is 6,656. So Mr. Fernandez invested rupees 1,20,000 and received rupees 1,92,000. So profit is now 72,000. So profit made by Fernandez is greater than Mr. Syed. Now fifth one, Samira spent 90% of her income and donated 3% for socially useful causes. If she was left with rupees 1,750, what was her monthly income? Now let Samira's monthly income be X. Income used is equal to 90 plus 3%, that is 93%. So X minus 93% of X is 1750. So X minus 93, X upon 100 is 1750. 100x minus 93x upon 100 is 1750. So 7x upon 100 will be equal to 1750. X will be equal to 1750 into 100 upon 7, that is 25,000. So Samira's actual income was 25,000.